We'll get going. Others may join as we go along, but welcome to an investor webinar. I'm delighted to have Paul Atherley, the chairman of Alkemy Capital, which obviously owns the Tees Valley Lithium project. Just a few house rules. This is being recorded. It also is going to become a public information webinar, which will be posted up on the Alkemy website. So please bear that in mind when asking questions, and also the way we answer them. We mustn't stray into uncharted territory, shall we say. If you've got questions during the webinar, please just enter them into the Q&A box and we'll try and read them all out. We've had quite a few questions sent in prior to this. We will try and get through some of them. If we don't get through all the questions asked during the webinar, or if you've got questions afterwards, then please just send them to your contact at VSA Capital. I think most of you are introduced to Peter Maxson. Send them to him, and we will make sure that somebody gets back to you so that all questions are answered. On that note, I think also most people on this are fairly aware of the project, judging by the questions we've been sent you. Some people are very aware of this project and very knowledgeable about it. So I think to a large extent, we don't need to run through the whole presentation giving the background, Paul, because I think it's pretty well known. But probably if you give a sort of 5-minute introduction and very much an update of where we are and what people are expecting to see in the short term and the long term future, I suppose, and where you're headed would be a good way of starting. So over to you, Paul.
Thanks, Andrew, and big thanks to VSA for your support, and firstly from you, Andrew, because I know you really like this story and you like this whole concept of investing in the midstream in the UK. As you mentioned, most people are reasonably familiar with what the story is. We're building the UK's first independent lithium refinery. It's up there in Teesside in the Freeport. I just had a breakfast roundtable with the Ministry for Investment, all about Freeports and all about the cluster effect and link to offshore wind and the car companies and the battery manufacturers. So this is absolute center of what everybody's looking at the moment. And the advantage we have, we're trying to make to the rest of the world, we've got this concept of chemical parks and bad weather, chemical parks linked to offshore wind in free ports. And that's something that's our calling card for everything we're doing. So as most people will know, we've developed the lithium refinery strategy based on the Wilton Chemical Park, which is the ex-ICI plant. It's fully engineered, full planning permission, ready to go. Initial focus on lithium. We're also looking at manganese and graphite. But the main game is right now is securing the feedstock and the offtake to this plant, this refinery that's ready to go. We've got a whole raft of OEMs, trading houses, and leading chemical companies. And when I say chemical companies, I'm talking about the biggest chemical companies in the world, some of the biggest car companies, and the biggest trading houses, all of whom have looked at the refining space and said, look, your model works. We'd like to do business with you. We signed quite a few MOUs, and really the next cab off the rank in terms of news flow is for us to announce the first of those feedstock deals. The concept is that we will bring in a high value product to the UK. We will not be bringing in, say, a spodumene or a low value product. Everything we'll bring in will be high value, and we'll convert that into a battery grade chemical. So the idea is it's a chemical process rather than mineral processing. We've got a highly experienced team, and I'll talk about the team a little bit later. But the key point is you say, look, you're a £10 million company. How are you going to fund a $300 million project? The answer is we're going to use mezzanine and green bond finance. We're quite well advanced with those financiers at the asset level. I just want to make that key point that Alkemy is a holding company that holds Tees Valley Lithium, but all the funding is at the project level. It's not at the Alkemy level. And as I indicated earlier, we're working closely with the UK government, who are very enthusiastic about this project. I think you're aware that China dominates the space. They control basically over 80% of lithium refining in the world. If Europe's going to have OEMs, batteries, whether it be for storage or whether it be for electric vehicles, it's got to create its own supply chain. So again, over a round table this morning, we're talking about realigning supply chains to the UK, and that gives you some idea of the landscape there. There's 700 gigawatts of gigafactories. That's just for the cars alone. Let alone that doesn't include storage, and it's going to need very, very large amounts of hydroxide and carbonate. So the current number is 325,000 tons, and there's virtually no major capacity available right now for them. Tees Valley Lithium is, we're looking at 4 trains to do 96,000 tons per annum. We're focused on the first train, which we're ready to go with now. That's aiming to be in production 18 months post financing. And as I mentioned, it's a chemical park, offshore wind. We've just been discussing the inbound processing relief and other tax benefits, the free ports with government, UK government's all over it, and the financiers are already there. They're just waiting for the feedstock to land. We'll be able to announce some financing arrangements. Just a little bit more about the chemical park. It's plug and play, and those of you who've been to site, quite literally our site has power, water, reagents, chemicals going literally right past our plot. We just hook into them, and then we have a service provider, which is Sembcorp. It's a big Singaporean company, will provide the services to us under a lease agreement. And then PD Ports, who basically saying, look, it doesn't matter where you bring your product from, we'll bring it to Wilton, so you can process it, and we'll export to wherever you want. And then this is the thing, again, we're talking about this one, the cluster effect. You know, some of our waste, that is some of our byproducts, are actually feedstock for our neighbors. So we're not in a position that we're importing, say, a spodumene, which is 95% waste. We're going to bring in high value carbonate or high value primary lithium sulfate, and the waste materials or the byproducts we're actually going to sell to neighboring companies. Just a summary of the process. We've got 4 potential inputs. That's primary lithium sulfate from Australia, which is the spodumene converted in Australia. Then the one that we're working on that's almost certainly going to be the first cab off the rank will be crude carbonate or technical grade carbonate from South America. There's a possibility of mica-based carbonates. That's a little bit further out. But the real big win is that we've working with a major chemicals company for recycled hydroxide, which means that when we get to 2027, we'll be able to provide our customers with an increasing component of recycled material for them to go into their end product, which is an EU regulation. And then in terms of what we're going to produce, there's 2 products. It's the hydroxide, which is goes into the more energy dense batteries. You lithiate with hydroxide for nickel, manganese, cobalt batteries. And then for the more, shall we say, the fleet cars, the smaller cars, or maybe for storage, you go for carbonate, which is lithium iron phosphate. I know there'll be some people out there who are jumping up and down saying not all battery chemistries for NMC have hydroxide. That's true. As the battery chemistries change and get closer to sort of less nickel in them, some of the NMC batteries will also be lithiated with carbonate. But either way, there's 2, we can do either product, and it looks like that the first cab off the rank will be technical grade carbonate through to producing a carbonate battery grade carbonate. Really excited about the offshore wind. This is what the car companies, the customers really love. This is not something for the future. I spent a bit of part-time in Australia and different parts of the world. They don't have this combination. They don't have a chemical park right next door to a world-class offshore wind farm that's actually being connected to the chemical park. So that cable, that HVDC cable that comes to Dogger Bank, lands right in the chemical park, right next to where we're sitting. Now, there's a bit of an issue because you can't get direct connection private wire into Dogger Bank right now, as it takes some time. But the UK government is offering us a synthetic PPA, basically saying we'll give you very, very low cost, wholesale electricity costs, guaranteed certified green now, so when you get going, ahead of when you can get your physical connection. So very, very exciting to be able to say to customers, we can produce you ultra low cost carbonate or hydroxide with very, very low embedded carbon. And that's just a summary of it, is that ultimately the customers, if you're in mobile transport, particularly cars, particularly the target market the market we're targeting, you know, if you say that the bottom end of the EV market's really tough because EVs are relatively expensive to entry level cars, and I think what we're being advised, we're seeing that the entry level cars made by the European manufacturers are going to be replaced by Chinese imports. The area where the European car manufacturers are going to is the mid-range and higher range, and these are what we call responsible luxury. They have to have a whole bunch of branding characteristics around them that don't leave themselves open to any form of criticism. So by way of example, when Andrew buys his next Range Rover, the top of the range one costs £190,000, which is not far off the average price of a house in this country. And when he's parking outside his fashionable restaurant in Chelsea, he can't have just stop oil or eco people writing on the side of it, you know, ecocide in Myanmar. Range Rover has to be, JLO has to be absolutely sure that every single product going into that car is the lowest possible embedded carbon, and it has all the elements of transparency. So the market we're addressing is, shall we call, the responsible luxury market for the automotive OEMs, and it's a big market, and it's nothing like as price sensitive as the bulk market. And I've just been advised that we're now actually starting to see premiums coming into the market for people who are willing to pay a little bit more to be absolutely sure that the materials going into their consumer-facing products don't have any of the potential nightmares that Andrew would face with just stop oil protesters defacing his new Range Rover. I mentioned the zero waste thing. The zero waste is an absolute given in Europe. This idea that you can import waste into Europe and do something with it is just it's, you know, the dispose of waste, the bulk waste, is about 95 pounds a cubic meter or something in this country. So zero waste is really, really important, and the cluster effect of Wilton's really important for that. And as I mentioned, renewable energy is the big win. It's the uniqueness of the UK. We've actually finally got some use of this bad weather, and that's making it into offshore wind, into these things called chemical parks that happen to be in free ports and happen to be in clusters. So a real strong competitive advantage for us. We're moving quite fast. Obviously, you can never go fast enough for shareholders, but from the idea of securing the site to where we are now, we're fully engineered, fully approved, ready to go, shovel ready. And as I say, the next milestone is this feedstock and offtake, and then financing and start building the project. I think most people are aware the economics are very strong. This is the merchant refining model is well understood in many parts of the chemical industry, and the typical returns are very high. Not necessarily quite as high as lithium, because lithium is quite strong at the moment, but typically long term, you're looking more than 20, 25%, 26% EBITDA margin over the long period. So it's a very attractive business to be in. We're building out the team. We've very grateful that Conrad's just joined us. He's ex-PwC. He's a geologist by background. He's been in the battery metal space in Australia. And Vicky, some of you have met Vicky Jekyll. She's up in the northeast at the Weardale conference recently, and she's very impressive knowledge of the sector. She's ex-Johnson Matthey. And we're grateful to the Wave team. The Wave team is acknowledged throughout the industry. There's probably the most advanced process engineers in the lithium space. And that's basically the quick run through of where we are. Obviously, the share price has migrated down to the lower levels as we progress through a difficult market and maybe a lack of news flow. But we're hoping to turn this around now with some very not strong news flow up and coming. Andrew, I hope that's helpful.
Yeah, no, I think we can turn to questions. Just for the record, by the way, I actually don't own a Range Rover. I actually have a Citroen Saxo 1.3 because it doesn't have to pay a ULEZ charge. But also those that know me actually know that I cycle to work every day and tend to cycle everywhere. So I'm very green, pedal power. I just picking up on a few themes from the questions we've been sent prior. And then we'll move to the questions that are coming up. But one of the sort of themes coming out of a lot of the questions, Paul, is all of these sort of OEMs you're talking about, feedstock providers, are they going to be committing some of their own capital into this? Is yours a bit of a jigsaw puzzle where here's the plan, here are all your players, and now I'm going to tie you all together and you're going to fund it all?
Well, the answer is that that's a possibility because we've been offered that. So clearly, if you're looking to secure refining capacity over a period of time, and typically the OEMs look at 5 to 10 years, then it makes sense also to be an equity participant in the project. So we're not saying it's going to happen, but we are saying that a couple of the potential feedstock suppliers have approached us on that basis and offered to participate.
Okay. Now, also in terms of as the money comes through, another sort of theme coming in here is how do you then move the business forward? You've started recruiting people. I mean, obviously you have to get the order correct because you don't want to have a full team there until you've got the OEMs and the feedstock providers in place and the capital in place. Otherwise, you burn all your money. So could you just talk through? Again, I'm picking up sort of a whole host of questions here of how you put that jigsaw together, getting the right number of people, spending money in the right places in connection with the money coming in, so to speak.
Well, the shorter answer is you have a really good financial advisor like VSA, and they guide us through that process. But it's tricky. But we're at that point now. We think the catalyst to unlocking the two things you talked about was recruiting the additional members of the team, and the finance is the feedstock. I think once people see a feedstock deal with a credible provider, then everyone knows there's plenty of offtake. There's big demand. So if we can show a feedstock deal, then that's the catalyst for us to put in place what we're calling the mezzanine finance, which will be the funding that will take us through the front-end engineering design studies right through to the main finance, which will be the green bond. So catalyst is the feedstock announcement.
So just picking up on that again, I'm going to ask two more before I get into the actual questions. On the feedstock, I mean, as you say, there's plenty of people who want the lithium hydroxide. There's also plenty of lithium coming out. People seem to be announcing new projects the whole time, finding it in new countries. I mean, how advanced are you? How easy is it going to be to get that feedstock provider to commit to you a certain amount? And what's the sort of timing on that, do you think?
So again, it's a chicken and egg situation because if we were up and running as a refinery, they would commit a lot more easily than they are doing now. So it's a bit of a chicken and egg. We have to get some feedstock, get going, build the first train, and then that attracts other feedstock suppliers and other capacity. So again, the answer is relatively straightforward. It is do the first feedstock deal, get finance, get the next first round of financing, and start developing the project, and that attracts other feedstock deals across the line because they then know it's happening and they can commit to it more easily.
Okay.
Just on your comments about there's plenty of lithium around. There is. We've been saying this for a long time. Is that what normally happens? And Andrew, you're very aware of this. Is that when there's a high price of a commodity, all the miners breathlessly go out and expand their operations. And we said, well, the outcome of that will be spodumene prices will fall, which is what they are doing. But where the real bottleneck is, the real shortage is in refining capacity. So the margin transfers from the spodumene margin at the mine gate to the refiner. So we're actually seeing that process playing out real time.
I mean, actually, if you look at it, it's what happened in the oil industry as well, exactly the same. And of course, the way to play it is to have a hand in both pot, which the oil majors have as well. But it's just one more general question from the pre-questions, and then I will get on to the ones being asked. And that is, we've had a lot of questions come in. Really, a lot were focused on the IRA, that's in America, Inflation Reduction Act. But obviously, across Europe and in the UK, various people are trying to put in place, should we say, equivalents, although I'm not sure you can have an equivalent of it completely. It's quite an amazing act. How will you be able to benefit from these sort of incentives? And can you tap into the IRA? Are you getting equivalent offers around Europe or the UK?
So the answer is we can, because Rishi Sunak did a deal with Joe Biden called the Atlantic Declaration, which gives us 2/3 of the subsidy for an electric vehicle. Electric vehicle subsidy in the US is $7,500 US. We can, if we produce a lithium product, a hydroxide or a carbonate at Teesside and send it to the US, we can provide that car manufacturer with 2/3 of the subsidy under the Atlantic Declaration. So that's one thing. The second thing is, really importantly, and I mentioned it earlier, was, and I was down at a lithium roundtable in Australia earlier the year with the Australian lithium miners. They're saying it's not all about capital, it's about operating cost. And a big part of the operating cost is obviously energy. And, the reason why Europe's got such a problem at the moment right now is because energy prices are going through the roof. This offshore wind, this bounty of offshore wind that we've got in the UK, the government very cleverly is giving us these synthetic PPAs, which means our wholesale prices that we're going to be offered are going to be equivalent to, maybe even slightly better, to the best of the US, let's say in Louisiana and Kentucky. So that's the second advantage of the government. The third one is UKIB, which Andrew, has suddenly become very generous and financed a mine down in Cornwall through Jeremy Rathel's project in Cornwall, and it shows you that suddenly governments previously never had any involvement with putting money directly into mining. We're midstream processing, we're not mining. So I would suggest to you that UKIB will be right up there on our list for people we want to talk to when it comes to the main funding. So yes, I think the UK is, and it compares very favorably to continental Europe, shall we say, because there's a lot of talk in Europe about subsidies, endless reviews, but not a lot of money being spent. The two countries that are spending the most money, providing most incentives, are very obviously the United States with the IRA, but also Australia, Western Australia, with particularly the Northern Australia Infrastructure Fund. These are very, very tangible amounts of money that are being put into mines and developments, which is good for us, because the Australian government is very, very supportive of this idea of us upgrading us. Instead of digging and shipping a spodumene and sending it to China, they really do like the idea of converting a spodumene into a primary lithium sulfate at Port Hedland and then sending it to Wilton. And we're actively working with Austrade, who've hosted events for us here in London and also recently in Australia to support that model. So I think even though we don't have all the benefits of the IRA, we have quite a lot, and we also have this incredible competitive advantage of chemical parks. And by the way, they're chemical parks in free ports linked to offshore wind. The US doesn't have that, and Australia doesn't have that. But that's what we're tapping into.
Okay, I would just stress, because this is going to be a public webinar, that any comment about any sort of investor at the moment, there is nothing that has been arranged that is in the public domain or could be announced, and that is pure speculation. That just be aware of that, please. There's a lot of people obviously we're talking to across a whole field, so I think the comparison there really was that because that particular institutional group has invested in Cornish lithium, and so the word lithium is involved. Anyway, let's move on to some of the questions that are popping up, and I'm going to read them in order, so they could be a little bit random, but the first question is, from your presentation, you've got a lithium hydroxide price of 22,500 USD as a target price. We're currently, obviously, lithium and lithium hydroxide is trading a lot lower than that at the moment. What are your thoughts on pricing at the moment?
So we that's just a nominal price. We're a margin player, so we're a converter, and we take a margin. So it doesn't really matter whether the lithium hydroxide price is 11,000 or 70,000 as it was. We still take a margin. The margin's higher at higher prices, so the question's right. is that the margin will be lower. But as I indicated as I went through the presentation is showing EBITDA margins of 13-40%, which reflects the higher lithium price. We're saying at a base, it's around that 25-26%, which is typical for the chemicals industry at the bottom of the cycle. So if you run it at 10,000 tons, $10,000 a ton for hydroxide, you'll still get your 20, 25, 26% EBITDA. So we want to be clear to investors, we're in the margin business. We're not in the price taking business. We're trying to avoid having a price exposure to lithium, other than the fact that when lithium prices are higher, our margin's slightly bigger.
Yeah. Now, the next question actually is quite relevant to some of the things you've been saying, Paul, and that is, you're obviously engaged with the current government, but unfortunately, it does look like the next government is not going to be the current government. How is that going to fit in, and are you having conversations with the opposition party at the moment?
Yes, I've met with Jonathan Reynolds and Rachel Reeves a couple of times, and was at a business conference recently and had listening to Angela Rayner in full flight. I think the reality is that every one of their green policies is unfunded at the moment. They like the current government, they don't have any money. They're not going to have any money, but they're very committed to everything we're doing. So it's jobs in places like Teesside. It's very importantly keeping the automotive supply chain alive. I was in the breakfast this morning. It was Toyota and others, and they are very committed to battery supply chain in the UK. I would be incredibly surprised if this new government coming in, was to change any of that. In fact, I think they'd be supportive of it because it's incredibly jobs dependent. And to give you some idea, this country produces a huge amount of internal combustion engines, not the cars, just the engines. And the whole of that industry has got to migrate to what's called electric drive units, basically go for EVs. That industry supports something like 780,000 people. This government isn't going to do anything other than be supportive of, the new government's going to be supportive of that. So we think there could be changes to things like free ports. In my discussions with them, they're not big fans of free ports because they've got some perception it's some form of tax avoidance scheme. They sort of see it sort of Gibraltar on Teesside. I think when they look at the detail, they find that's not the case. But even if they did scrap the name Freeport, they still will keep the legislation. Two bits of key legislation are a whole bunch of business tax relief benefits that we get. The key one is called inbound processing relief. And that's a piece of legislation that's been around for a long period of time. It exists in many other countries. And I'd be very, very surprised if the incoming government was to change that. So overall, there'll be some cosmetic changes. I think fundamentally they'll be very supportive of what we're doing.
And I think it's fair to say some of the organisations underneath the government act in the same way, regardless of which government is actually in power. So, one has to remember that as well. And obviously with this sort of inquiry that's going on at the moment, we sometimes wonder whether the government is actually governing anyway. That is a complete red herring. Sorry, Paul. Back to questions. So there is another lithium refinery company where you're trying to build the same sort of thing, which is, I think, green lithium. What are the merits that you have that they don't have?
I think our strategy is that we've got what's called a split circuit. My understanding is they're going to be bringing spodumene into the UK and process it into lithium, which is fine, except for you're bringing something in that's 95% waste and 5% lithium. We're trying to bring in technical grade carbonate, which is 99% lithium. So we're in the chemicals business. They are in part in the minerals processing business. We don't believe that loading up the world shipping industry with 95% waste to decarbonize the car industry makes any sense. And I think that's why we're getting such traction with the leading chemical companies and the OEMs, because they're looking at ultimately the amount of embedded carbon there is in the product that we're going to produce. And I think that plays to that. To our strategy is the one that they like.
Yeah, and so the next question, I mean, I'll ask it. It's sort of yes and no relevant type thing. But what's the situation with British Volt? I mean, that doesn't actually necessarily impact on you directly, but interested in your view anyway, Paul.
The answer is we don't know, because Recharge took over the site, and I think they're still working on getting funding arrangements. It doesn't matter whether it's British Volt. Again, talking to the car companies this morning at the roundtable, was they want more battery capacity in the UK. We've seen the Tata one at in Somerset. There will be more, whether it's British Volt on that site or whatever. There will be more battery capacity in the UK.
Okay. A presentation a year ago, it was mentioned that an employee was being hired. Has that position been filled? We sort of need to know which employee, I think, because you do have employees, but maybe to answer the question, just talk a little bit about how recruitment is going. There have been one or two changes, you know, how you see that when you really ramp up. Maybe just give a little bit of an overview on that, Paul.
Sure. So when you start off as a startup, as we are now, we had a team that did a great job pulling it all together, and John Walker did a fantastic job bringing it to a certain point. We now need a CEO who's going to come on board, who's going to actually build, you know, one of Europe's biggest lithium refineries. So it's a different skill set. So we've got a long list, and hopefully go to a short list. So to your question earlier about what's the catalyst for finance and finalizing building out the team, it's the feedstock. So once we announce the feedstock, we're ready to go with the recruitment of the CEO and the finance column at the same time.
Okay. Obviously, if, by the way, if somebody asks a question, they don't feel they've got quite the right answer, then please just email us with more detail of what you want, and we'll make sure we get back to you. Just carrying on reading down, how much money has been spent in engineering only, and can you comment on the sort of progress that's taken place there?
Engineering only is several £million. And if we're just talking about lithium at Tees Valley, what we've achieved is a class 4 study and full planning and EIA approval, which means we can go into the next step, which is front-end engineering design. So we're ready to commence work on the ground. We can do all the preliminary work on the site, and in parallel with that, we do the front-end engineering design going forward. Not sure if that answers the question, but that's where we are at TVL.
Yeah, I mean, obviously at the moment it's what I describe as all design work rather than sort of physical engineering, isn't it? So I suppose that's the key to it all.
So the way it works is that we've got specific vendors, and what we do is we've done a whole bunch of vendor testing in terms of producing the product. We've gone out to the customers and said, would this product meet your requirements? And they will come back and say, yeah, these meet our specs, or no, you need to do X, Y, and Z. We then go to the vendors. These are the people who are saying, us a bit of kit, and then work with them to make sure, this is part of the feed studies, that we can actually achieve the particular customer specifications. So that's the next step. It's the feed process to finalize all of that. And whilst we're doing that, we can start work on site, doing all the preparatory work for actually building the project.
Okay, we're going to come on to some financing questions, and I'll try and group them all together. First of all, any thoughts about the cost of the financing, and has it gone up significantly over the last few years through general cost increases, inflation, etc., etc.? Any thoughts on that?
So the finance itself, we will be going to the bond market, the Scandinavian bond market, which you know, and you know who we're dealing with. And when we were dealing with them 2 years ago, before interest rates took off, we were dealing with a sort of bond with about an 8 to 9% coupon. And then our friend Kwasi Kwarteng had an intervention into the bond market, and interest rates went up to about 14%. But now they're coming back down. And the question is really good, because actually it's in part linked to inflation, as you know. So we're suggesting sort of 10, 11%, something like that, which would be for the straight bond coupon. And then in terms of the project itself, which is another good question, is how's inflation going to impact on that? That's what we do with the feed studies. We go into the vendor finalize all arrangements with them, and then we get a contracted price, and we lock in fabrication slots and delivery times and all of that. And because we are a plug and play without much infrastructure to put into place, we think we can lock down a lot of the pieces, the main piece of kit into the project, and won't be subject to these much broader inflationary impacts, which are due to with steel and concrete and all these other ones. So yes, we're alive to the fact that projects in the UK are being hit hard by inflation. So we're going into this with a view to bolting down as much as we can. And, there's various ways of doing that. One of it is what I've just described. The other one is taking a modular approach to it. So yes, inflation's a battle, but we're going into it to try and manage it from the outset.
I don't think you're going to do an HS2 and go completely ballistic. Anyway, carrying on. You've said obviously that your Alkemy is the holding company. You want to do all your fundraising quite sensibly through either TVL or PHL. Question here is, will existing shareholders be able to participate at the company level?
Yeah, yes, they can. That's been quite a surprise, actually, because we thought existing shareholders would be delighted to sit at the Alkemy level and just receive all the benefits. Or sort of, if you like, a Berkshire Hathaway, sit there and watch all the dividends flow up to it. But no, they've said no. We'd like to be able to participate both in the equity and the bond side. And I've had a similar experience with another company as well. There's a lot of interest in the bond. So the answer is yes. We will, through VSA, we will come to you and say, look, we're doing this private placement for the equity, and we're doing a bond. If you want to be subscribed to the bond, then I'm sure we can put you on the list.
They will obviously probably be private companies. You'll have to bear that in mind if you're participating, but yes, you can do that. Yeah. Keep going with the questions because they're rolling in. I want to try and get them all done because they're sort of live. Rocktech will get 200 million euros from the German government. What can you expect from the UK one? We sort of touched on that, and obviously you're hopeful, but you're not sure you can give a precise number at all. But can you compete with them without some form of subsidy?
Well, the answer to that, absolutely. Germany's timelines for approvals and costs are high. I mean, I'm sure Rocktech's got it under control, but Germany in general, energy costs are frighteningly high, which is why BASF has left Germany. The world's biggest company has left Germany because its energy costs, because it closed nuclear, its energy costs have gone through the roof. So Germany's really suffering from that, whereas we're going the other way. We had 60 days of negative electricity costs last year through offshore wind. One of the things we were talking this morning about was how to fully capitalize on that. And I mentioned the synthetic PPA. So answer is, anything related to energy, we are very competitive with Germany, certainly with the reagents, certainly with on the people side of things. So I haven't seen Rocktech's cost, but I would imagine we'll be as good, if not better, than them. In terms of the question on the German government subsidy, we're not going to get $200 million from the UK government. They're quite tight. They're not as wealthy as the German government. But we will get what I mentioned. It's UKIB is operating as a separate, it's not a government fund. It's like a commercial bank, but set up by government. So we will be able to talk to them about whether they want to invest in the project. But we're flagging for investors right now. We're going to the Scandinavian bond market through ABG Sundal Collier, and we think we can get 60% of the $300 million of funding for the first train at TBL through them. And so we're then left with $100 million of, shall we call it, equity, of which we would like to go to organizations like UKIB and others, ATF and other organizations, to see if we can maybe not fill all of that gap, but fill some of that gap. So can't match the Germans in terms of the $200 million, but we've already got a financing model that we're ready to go. And just one final comment, ABG have been working with organisations such as NAIF, Northern Australia Infrastructure Fund in Australia. They're very familiar working with these government agencies, so something that's bread and butter for them. Then, of course, VSA will be able to, I'm sure, help us plug the rest of the gap.
Yeah, okay. I'll on that question, I'll let you answer this one a little bit, although you may turn it to me. how are you going to generate institutional interest in the shares when the free float is about £5 million and all the financing is going to be done at the project level?
I don't know whether you need institutional investors. If the company is receiving dividends or distributions in specie or other returns, I think there will be, well, my discussions with your team, Andrew, and others, was if you buy Alkemy and all the funding is done at the asset level and there's a distribution up to us, and at the end of the day, Alkemy shareholders receive distributions as a yielding investment, I'm absolutely sure there'll be a ready and available audience for it, whether it's institutional or not.
I think we probably also need to see what Jeremy Hunt says on November the 22nd in his autumn statement in terms of actually creating some sort of institutional market anyway at the moment.
But just a little bit of background on that. I know the liquidity, and I completely agree with the question about the free float. But in terms of size, we pulled Fidelity into Pensana and M&G and FSDA and these sovereign wealth funds into what was a relatively small market cap companies. They will invest for the right business model, and Alkemy may not suit those bigger funds, but there will be suiting funds that are looking for exposure to this sector, has UK provenance, and hopefully has fantastic growth and yield for it. So that's the model. It's basically a holding company. It says, look, here's these businesses that we are incubating. They go off and finance, and then Alkemy will receive the rewards from those endeavors.
Okay, let's crack on because the questions are still coming in. I really want to try and get through as many as possible. So what does shortlisted as preferred lithium refiner mean, i.e. is Alkane one of two, etc.? When would you expect the process to conclude with an OEM, and can you expand on the OEM scale process, etc.?
So the OEM worked for 8 months with us, and that wording that we used in the announcement was basically approved by them. They that's their wording. We've informally flagged people that we think will know the answer to the end of their review process first quarter next year. We're obviously still having conversations with them. So I'd say the answer to the question is, are we one of 10 or are we one of two? I think we're more likely one of two. And when will we know? First quarter next year.
Okay, that's pretty precise. Again, I think it's probably almost has the same sort of answer, but it says, basically, when will there be a binding agreement? Because in order to get a fundraiser where you need to have the buyers and the sellers lined up, it's a similar sort of answer, isn't it?
Yes, it is, except for that you don't need to have everything bound up for a mezzanine agreement. That's the nature of a mezzanine financing. That's why they are higher risk, and as long as they can see the exit point. So a mezzanine financier will help you get to a binding agreement, a binding offtake, a FEED study, so that they know their exit point is the main bond financing. So the question's absolutely right in principle, but these mezzanine financiers take more risk on feedstock offtake and FEED studies than a main financier. So it's not like we have to go through the whole process, get everything bolted down before we get the next round of finance. The mezzanine, by its very nature, is that bridging finance between where we are now and the main finance.
Okay, we'll whiz through a few of these next ones, I hope. What are the current prices of feedstock being offered to Alkane?
I can't discuss it, but remembering we're a margin player, so whatever price we have to buy it at, what Vicky does, she manages matches it with an offtake. So we don't take price risk. So if the price is very, very high and Vicky can sell the product at a higher, what we look at is the margin on the way through, and the margin's got to be more than the operating cost, the capital recovery cost, tax, royalties, all the rest of it, and then the bit that's left over is our return. So we're a merchant converter. We're not a price taker.
Yeah. Okay. Are there any issues with potentially extending the agreement for the lease date at Wilton?
No.
Okay, that was a quick answer. This one might be a bit longer, but we don't want to go on for too long. But you have sort of brought us in recently, actually, and that is, can you expand upon the manganese and graphite opportunity?
Yes, so it's fascinating is that we're dealing with other companies, and these are offtake parties, people who want the carbonate hydroxide. They also want guess what? Graphite and manganese. And the funny thing about graphite and manganese, they also lend themselves to these split circuits for all the same things. Everything we said about lithium applies to manganese and graphite. And there's a lot of manganese around in the world. Manganese prices have been smashed to pieces. There's a lot of seaborne manganese available. And so we're in discussions with quite a few parties about replicating what we're doing with lithium in manganese. Graphite's a lot more specialized, but we are talking to a major player in the graphite space about doing exactly the same. And the ultimate benefit for them, whether you're in lithium, graphite, manganese, is what we talked about at the beginning, is we're selling into what we think is a premium market. We're not, if you dig it out of the ground and send it to China, you're going to get commoditized. If you bring it to Europe and put all those provenance characteristics around it, rules of origin, reach regulations, transparency, all of those big, long list of items, that means you probably, hopefully, we can generate a product that sells at a premium to the commodity price, which is obviously very, very attractive to both the graphite players, the manganese players who are being, they're at the bottom of their cycles at the moment. So they're in both cases, they're very interested in this model and see if we can make it work for them as well.
Okay, we've got 12 more questions. Please don't put any more questions in, because if you've got further questions, send them to us and we'll get them answered for you. But we'll rattle through these last 12 we make, because time is going to run out on us otherwise, Paul. So very quick answer to these ones. Since LPF is cheaper than NMC, it's being reported that there are less buyers of lithium hydroxide as opposed to lithium carbonate. Do you think once Alkemy becomes operational, the market for lithium hydroxide will be more substantial than now? I mean, on top of that, you could also add that probably there are going to be even more new technologies coming along, but they're all going to need lithium.
The answer is NMC is, they talk about it whether it be 50-50, LFP, NMC. We think we're settled on 50-50, and most of the European car companies are going to have to go towards the higher energy density batteries, which is NMC, which is a market for us. When you talk about storage, it's different. Storage doesn't need the energy density. It can be LFP or sodium or something else. So the answer to the question is 50-50 NMC, LFP, and then there's a whole new market for lithium into storage.
Okay. Pensana has been nominated by the UK government as a partner under the Mineral Security Partnership. Is Alkane likely to be nominated as well?
Quite possibly. It's in some ways, yes. Yes. Short answer, yes. I know you want a short answer. Yes.
Yep, I like that. Yep. Is it fair to say that Alkane effectively leapfrogs lithium miners once feedstock is secured?
We like to think so. I mean, you've seen it before in the cycles. The miners have a boom when mine gate prices are very, very high, and then they oversupply, and then the mine gate prices fall, and then the midstream people make lots of money. You've seen it in copper smelters, etc. So we're saying right now this is the perfect moment for building a refinery, because there's a bottleneck in refinery capacity, particularly in Europe and North America, and the miners are now, the feedstock providers are now looking to add margin rather than seeing this declining price being just shipping as a commodity to China.
And a lot of it is about competition to China. Okay. Don't know how you can answer this, or it could be a very long answer, but let's see what you can say. Green lithium is an unlisted stock, but its market capitalization is 4 times higher than that of Alkane. What would be the main reason for this? Well, of course, if it's a private stock, you just set a valuation and no one knows whether it's real. But Paul, what's your answer?
I think we just needed to announce the feedstock deal, and then people could have a direct read through and say, wow, this is, and we'll start building.
Okay, so
announce a feedstock, announce mezzanine finance, and just start building, and then the stock will re-rate.
So the two next questions are: when will the feedstock agreement be confirmed? Will it be this year? And realistically, when do you expect him in a position to announce a feedstock deal and unlock the funding? I.e., both. It all comes down to when you can announce a feedstock deal.
Well, we put it to you. We provided, we provided to you, sort of behind the Chinese wall, the list of people we're dealing with. We are progressing quite a few players. I can't tell you the date when it'll happen, but I'm sitting here giving this webinar now because we think we're fairly close. So yes, we're inviting investors to be enthused about the progress we're making.
Sorry, and I apologize. Apparently, I've accidentally said Alkane and not Alchemy, which I do apologize for. I used to act for another company called Alkane. My apologies if I've upset anybody and mispronounced it. It is Alkemy Capital. Quickly for the next few questions. What's the cash burn rate? How long will current cash last before you need to raise more? Be careful what you say. This is a public webinar.
We'll let shareholders know when we need to raise more money.
In the event that feedstock funding are not secured in time to sign the lease at Wilton, have discussions taken place with Sembcorp regarding extension of the option to the lease?
The answer is Sembcorp have us up there as one of their 3 new investors in the project. They're working very closely with us. I'm not sure where this concern over the lease comes from, but we're working very closely with them, and they're big supporters of ours.
Okay, and that sort of answers another question just down there. So none here, down to the last 3. Original production was due to be in 2025. Do you think this is now slipped to 2026?
Probably, yes. Yes, I think so. I think it's a fair comment.
What percentage of Tees Valley Lithium do you hope to retain post-funding?
As much as possible. This is the whole idea of funding it at the Tees Valley Lithium level. So typically, we look at a 60-40 split, 60% debt, 40% equity, and then it just reflects on what valuation we have on Tees Valley Lithium at the time of that equity comes in. So maybe as an example, a read-through, we're doing a similar kind of financing in Pensana, which we announced yesterday, where the share price is currently 30 pence and the private investors are coming in at in the private company at 66 pence a read-through. So generally much higher than the that comes through, and that's down to dilution. And where Pensana is ending up with is 60-odd% holding in the fully funded subsidiary. I don't know where we'll end up, but we would definitely be more than 50%, somewhere in that range.
Okay, finally, and we have sort of touched on this as well, but we'll sort of wrap up on this question, I think, anyway. That is, Tata, as you mentioned earlier, are building a large battery factory in the UK, and the UK government has quite openly said it will provide big funding for this. So in your view, will Alkemy at some stage get similar sort of funding from the UK government? You've sort of already asked it, but your final go on government support, should we say?
No, I don't think we'll get the funding the way Tata have or way Rocktech have. We've set out our funding structure. It's a 60% bond at the TVL level, 40% equity, and all the equity, there may be some government agencies like UKIB or Automotive Transformation Fund or et al. All fit into that level. So no, we're not looking for Tata style funding or Rocktech style funding.
Okay, I think it was a lot of questions, a lot of information. So I'll just repeat one more time. If you've got questions unanswered, you want them answered, please email them into us. Those that have, we will get back to you. But Paul, thank you for that. That was an hour of an awful lot of information coming out there. I hope everyone found it very, very useful. And I'm sure you'll be back talking with everybody again fairly soon as more news comes out.
Thanks for your time, Andrew. Thanks for everybody for listening.